on the 9th of the 9th month of the year. Happy September 9th. Nice to see everybody. Let's go ahead and get started. First things first, we understand risk in trading. Please and always use trade capital only. Do not trade with money you cannot afford to lose, whether you're trading stocks, options, futures, forex, cryptos, whatever you're bartering. You know the risks. Okay, let's get to the charts. Happy Friday, everybody. Nice to see you. Say hi. Let me get logged into the channel. What you're looking at right now is a currency strength chart. We had some pretty high volatility overnight during the active zone. In the FX market around 2 a.m., Euro open and dollar was pretty weak. We saw the Aussie making a nice little comeback, the JPY, the Swiss. Pretty interesting week. I'm not going to say I liked it. We had a super insanely weak Japanese yen. We had some high volatility to close out the week. We're going to see where things are at. I'll take a look at the charts. Stocks and options wise, actually pretty green. We go to the SPY here. We're looking at a pre-market open at 403. I deleted the copied bars from 2008. We talked about that for the last couple of weeks, or at least last week when I dragged it on there. I was looking at 2008 potentially overlaying on current price and the similarities with this recent retracement, especially, right here. It looked eerily similar to what happened in 2008, where we came back down to test the low, had a little pop from there, and then 2008, as we all know, or we should know, just complete capitulation, crisis, the world is ending type move. Now, I don't know if that's going to happen in 2022. Perhaps things are different. We're certainly getting more probability, higher probability that the Fed rate hike is being priced in. Powell speaking this week. ECB raised rates, most aggressive rate hike in I think 11 years. They're up to 1.25%. That was as expected. The BOC raised rates. They're up above 3% right now. So if we take a look at the website, cbrates.com, and let me get logged into our channel. Say hi to everybody. All right. Logged into our channel. There we go. Get this back to 100%. All right. Greg, good morning. Chris, good morning. Gary, good morning. David in the house. Mosh? Mock? Moke? Good morning. Don, what's happening? Randy, good morning. Daniel, good morning. Steve, good morning. Wayne, what's up? Morning, everybody. Let me bring up my login here. So switch account to moi. There we go. And I'll say hi. Happy Friday, everybody. There we go. Steve, good morning. Craig, good morning. Maryland, what's happening? Okay. I wanted to look at the CB rates. So Canada had a rate hike this week, 75 basis points. If you can see that right here. Canada, just click on that little flag. 75 basis points. They're up to 3.25%. We also had an ECB rate hike. That's the Eurozone, 0.75%. Their official cash rate now at 1.25. We have the FOMC coming up in, that's actually the UK, my bad. The FOMC is coming up September 21st, which is a Wednesday, followed by the Bank of Japan, followed by the Swiss National Bank. All that will be coming in a 48-hour period. Switzerland is still sitting at negative 0.25%. The UK, they hiked rates back in early August by 50 basis points. They're at 1.75. And the US, currently sitting at 2.25. The expectation is they will raise rates by another 75 basis points. They did so in July. The market is pricing in a high probability they'll do it again in September. And from there, this is what we keep talking about, where will the Fed be by the end of the year? There should be, and likely will be, a correlation with where the Fed is going to be, expected to be, and how the equities market treats it. Okay, so meaning this, yes, I think that the market is pricing in a 75 basis points hike for September. It's probably been priced in for quite some time. The real key, in my opinion, is watching the December expectation. Okay, the December expectation is 3.75 to 4%. You can see that the probability is very high. That's where we'll be. So from September to November to December, it's looking along the lines of 75, okay, to bring us up to 3%. And November another 50 basis points, and December, another 25 basis points. So 75, 50, and 25. Again, not saying that the Fed is going to stop raising rates, but if we go into February, March, May, June, July of next year, the expectation right now is that once they hit that December rate hike at 3.75 to 4% as the market is pricing in, by July of next year, it is no different. Okay? So I told traders this week in the trading rooms, if the Fed is not looking to increase, if they're not looking to break or go beyond or greater than 4% with the official cash rate or the Fed funds rate, then essentially we're looking at the market pricing in a top in the funds rate, and typically that coincides with a bottom in equities. Okay? So far September is off to a better start than I expected. We obviously got off on rough footing after Jackson Hole. Let's go back to the SPY really quickly. We've rallied thus far. Now this doesn't mean that I'm super bullish. I've had a nice week in stocks. I'm gonna have a couple stocks called away for profit. But I still think we are potentially vulnerable at this Jackson Hole gap, which is right here. So there was our big drop from Powell's comments during Jackson Hole. I could see the SPY rallying up towards that September pivot, finding that Jackson Hole pocket. And from there, we'll see if the bulls continue to have any momentum or the bears fade this move back down. And as I've talked about, this is now 2 weeks. 390 on the SPY, 3,900 on the S&P 500. Watch that level. If we breach that level, that is a fifth wave to the downside. And that fifth wave is putting our June lows in jeopardy. Okay, now I still think that we have a channel to play. I think there's buying opportunities off of that level between taking out a June low, hitting channel lows, and finding pre-COVID highs from 2021. Those are levels that I'm watching. Okay, but right now with a couple of good days, we've had, I think, 3 green days, 2 green days. Okay, not talking about the band. But Jackson Hole pocket right around 410. That'd be the equivalent of like 4,100 or so on the S&P. But there's a pivot there, nice little pocket. I could see the bulls taking it back to there, and we'll see what the bears are made of, right? So this to me looks like a spot where, okay, we come back, find that Jackson Hole pocket, and we see, is it a breakdown from there, or is it a continuation? The bulls, in my opinion, if we break this high, off we go. We break this channel, there could be a pretty solid argument to get back and retest highs, completely like despite everyone thinking that we're going into a recession, we're in a recession, how bad things are going to get, doesn't really matter. We saw the massive disconnect between the real economy and the stock market in 2020, right? We could have the same thing happening here. Equities, in a way, is a hedge against inflation. It's a way to play the game against inflation. If you have any positive returns, this market clings to anything worthy. If you were buying or dollar cost averaging as the market dropped 20% in the SPY or 30% in the NASDAQ, there's opportunity there to at least show some growth in your portfolio. Okay? All right. So anyway, that's where we're at this week in stocks and options. We had a big move on some of our currencies. Let's go to the DXY. So the dollar index for the last 3 days has been pulling back. We have a September pivot. We have our 50 EMA. I'm still looking to see in this larger supply zone back in 2002, actually. That's a long time ago. You think about it. We're up to this supply zone in 2002. This could be acting as resistance. There's still some potential upside towards 115. There's some scary upside potential towards 120. But we still have an incredibly high bar count, and I'm looking to see, do we hit the 50 EMA? Do we break the 50 EMA? Do we break this trend line? And then make our way back down. All I'm literally looking for is a 1, 2, 3 wave move. That's it. Now, whether that happens now-ish or goes up higher and then happens later, it's still based on the wave counts, the bar counts, the technicals, the overextended conditions, relative strength on monthly, weekly, daily, lots and lots of divergence on these dollar pairs, lots and lots of divergence on the yen. Okay? That doesn't mean the top is in. It's one thing. Don't call tops, don't call bottoms. I took some losses this week in Forex, and it kind of sucked. I washed. I had some gains early in the week. I washed some with some scale outs of my Swiss yen and my dollar yen. Those are the two that were really getting a little bit annoying. And I'm a little bummed on the dollar yen because once I took some losses, I had a pending sell at 145, and the high of the week was 144.98. I mean, really? but I've got a 145 and a 147.50 and a 150 just in case. Also, I looked at this morning. I'm like, you know what? I got to get in. I missed some opportunities. I don't think I did, because the reality is I'm a lot more confident that if we're going to find this 200 EMA after a 400 plus bar count on the daily time frame, we're obviously going to have to break this trend line. Okay. So as much as I want to jump in and try to scalp, and I didn't. I missed my entry at 145 by 2 pips. I will look to see how this aggressive trend line behaves. But if we break this trend line, I'm going to actively look for some flags. There's a monthly pivot. There's a low. There's our daily 200 EMA bar count. So a trend line break, I'll be a little bit more assertive on that confirmation. Otherwise, I'll leave my 145 and my 147.50 and my 150 pending orders. And if I scale in there, that brings my trade, my net position probably up to like 141 or 142, and I'm still going to target this low around 132, or ideally, 128. But we will see. Okay. Let's see here. Profit target, took trade short, got it. So you're making some good profit there. Good. Yes. Awesome. Yeah, there was some good volatility on the JPYs this morning. I mean, really, it was the dollar, right? I mean, we had some big moves on the dollar. You take a look at the currency strength chart. The euro dollar made a nice little poke up to that monthly pivot. That was a little short-term gain. That pocket around 101.20 was filled. Our pivot from September was hit. We still have a large trend line here as well. Can we start putting in something like this? We start, carving out this really tight falling wedge, and then it's a relief rally. Again, the timing of this, I mean, next week is the 16th. The week after that's the 23rd. Guess what happens that week of the 23rd? The Fed is the 21st. So we're going to have inflation data printing next week for the U.S. And I'll say this, inflation, as far as watching the news and watching currencies, inflation has made way more headlines than job reports. Inflation has been way more influential as a catalyst for price action and volatility than anything else. It's the news to watch right now. So I believe next week on Wednesday, I think we have CPI data next week for the U.S. So let's take a look. Next week, Tuesday the 13th, we have CPI data for the U.S. Again, we will see. Expectation-wise, is it positive or negative? If it comes in negative, that trend on inflation is looking better. Now, how the market reacts to that, I don't know. Remember that big jump? We had 9.1 year over year, and then it dropped to 8.5, and the market celebrated like it was the greatest thing ever, right? So do we have another print that shows that inflation is trending lower? It's possible. Is that enough to get the Fed to pause and pivot into a more dovish stance? Probably not. But what we can see is that Fed funds rate is not going higher. Okay. And again, markets are typically forward thinking. A lot of stuff gets priced in ahead of time. So as long as CPI data is trending to the downside, I think the Fed funds rate remains where it is, not looking to raise rates and move the target any higher. And if that's the case, I think that things start to shift and we might see that, peak in the Fed funds rate, bottom in equities, and we'll see how that plays out. Right, but that's important data to watch next week. Currency traders, important to watch that CPI number because we've had massive daily volatility during those CPI prints for the U.S. and other countries. Okay. All right. And at the end of today's session, we'll take a moment of silence for 96 years of Queen Elizabeth and her 76 years of, was it 70 some years of reign, of monarchy reign? Pretty impressive. Crazy stuff. And we literally talked about it this week or yesterday in my trading room. Like somebody said, "Oh, she's in the hospital." I'm like, "Oh, I hope she pulls through." Wasn't the case. Uh, so I feel bad, but yeah, I mean, 96. That's a good run, especially with and she had COVID, right? Last year, this year, I don't know. So anyway, we'll save that moment of silence for later. But that's what's going on. Let's take a look at some currencies. Dollar index, like we looked at, couple of days to the downside. Okay, watching the 50 EMA. Like I said, this larger supply zone on the weekly with overextended conditions. Okay, go back into, this is 2002, big pocket here, big supply zone. And if this acts as resistance, again, technically looking at some wave counts, this should be a corrective pattern. Now, whether it comes all the way back here remains to be seen. If we go up higher and this dollar stays very stubborn, Okay, then we have this pocket to fill, and we have our high in 2000, 2001 before we have likely a massive resistance area on the dollar. And again, still looking for a correction to come from there. But as I told traders this last week or so, based on the technicals, it seems like a lot of stuff in the Forex market has felt broken. We've had stubborn trends, irrational trends, longer than expected trends. I mean, I'm all about seasonal trends, having 3, 4, 5 months of movement, pre-summer pushes, stuff like that. But we've had an 18-month trend on the dollar. That's a lot. Okay. And we've seen a very steady 6, 7, 8 month trend on the yen. And, I mean, yeah, Denise yesterday in the trading room shared historical context in the Swiss yen. Around 150 is major resistance. 158 was this big spike high, like almost like a flash crash. That was back in like 1978, 1980. So, looking for some big historical context. I mean, I'm looking. I'm trying to look left. I've got indicators that, I mean, I'm looking for corrections. I'm anticipating highs and lows to form, and yet they're just not giving us the confirmation that we're really needing. A trend line break is all I need. A little bit more price action at the top, so a price pattern on a smaller time frame. Anything looks better than what we see right now, which is a straight up move. Okay, but dollar index with the supply zone, we'll see if this starts to show a correction. Again, CPI data next week, Fed the week after that, and keep watching this CME watch tool. This is a really good tool to keep an eye on week to week. I'll post this in the chat. So this is a Fed watch tool. I would encourage all of you to take a look at it. I use it every day in my trading room as a reference. This is a big thing. They said for the last decade, don't fight the Fed, right? Whether the Fed is accommodative, like we've seen the last 14 years since 2008, once we put that bottom in 2009, Fed's all accommodative, dovish, cut rates, stimulate growth, right? Quantitative easing, infinity. And now we're going into quantitative tightening. Our second round of it since 2016. We started with Yellen back in 2014, but second round of it, obviously inflation's a big sticking point for this year, and things are messy around the globe. But this Fed Watch tool is going to be important to see, does the expectation shift? Because if it's not shifting into February, March of next year, and it's not getting any higher than what's expected for December, I think the market can start looking into other things. There's probably going to be some short squeezes. There's probably going to be some covers. We'll see some likely dollar corrections. And I'm curious to see any type of dollar correction, any type of dollar weakness, how that translates into equities. Okay. All right. Yeah, Donna, keep them coming. Keep recruiting those likes. Yeah, everybody, if you could hit that thumbs up button for me real quick, would you? Let's get, we got 50 some people watching live. Everybody else tunes in. They come in late. They straggle in. We get, 400 or 500 views every video, which is great. But I'd love to see, as many likes as possible. Good stuff. Yeah, follow through on. I mean, look, the follow through on the euro is mostly the dollar. I mean, you think about the way it's weighted. 50+% of the dollar index is the euro. So if you see a dollar move, you're going to see a move on the euro. So it really, I mean, any follow through on the euro may be just a weaker dollar for right now. Okay. All right. Let's go back to some currencies. I've got a big list of stocks. We had a busy week. This actually is all the notes from this week's trading in the Equities on Demand trading room. So a lot of expirations for next week. A few credit spreads, a handful of credit spreads that we can manage. We'll take some losses. We might have some wins. We've had a pretty green week so far. Today's class at 10 o'clock, I'm going to look and see maybe we close up some of these for profit. I know when we looked at yesterday, I'm trying to think here. We had some trades filled on Uber. We had some new entries on CTRA. I might be losing a stock. Let's see here. SVXY, we got filled on a bear call spread as a little bit of a hedge, but I've got a covered call that if I get called away next week, that's like $6 and change a share, which is great. Put in some new trades on Apple, Honda Motors. What else? Uber, we got filled on those. A lot of covered calls for next week to repair some credit spreads. So busy, always busy navigating the portfolio and stocks and options, but that's what makes it fun. We're drilling costs down, we're generating some income, and we're always trading. Okay. Hey, there you go. Tell me how to say your name? Mosh? What is your name? I like that. Caught you earlier, Beyond Capital. Yeah, we posted a couple. On that note, really quickly, if you have not had a chance to subscribe to my other channel, hedge fund that I'm a part of, Beyond Capital Group, my portfolio manager partner, Jared Johnson, we're having a blast. So if you go to search Beyond Capital Group, We're right here. Now, obviously, I want to have the youtube.com/Beyond Capital group, but we just started the channel a couple of weeks ago. So if you would do me a favor, search for Beyond Capital Group. I'll post the link here to the channel and subscribe to it. We're going to post. We actually are contacting a bunch of friends of ours in the industry, traders, managers, and we're going to do. We've got a bunch of interviews scheduled. We're going to start doing these market snapshots on a weekly basis. So here's the channel right here. I hate the fact that we don't have that custom link, but we need to obviously prove our content is real. But we started from 0. We're at 100 subscribers, so we're obviously going to try to increase that. But it's good stuff, and we'll keep bringing some good content for me on this channel, for the Pulver Report, and my channel personally. I'm just going to keep doing live sessions Mondays and Fridays, and just keep referencing, like, we're going to start doing snapshots here, what we're doing in our hedge fund. So it'll be good stuff to watch. And so this content will grow, the playlist will grow, and we'll have some fun with that. Good stuff. As in chocolate, moch. Sorry, man. Anyway, I appreciate you watching, and for everyone else, if you would subscribe to the Beyond Capital Group channel, fantastic. Moch. All right. So DXY, we're good. Let's have a look-see at, I'll take a look at stocks in a moment. Let's get some currency pairs running. Let's go back to the daily. So directionally, I looked at this morning. These are some of the directions I'm trading for my trading room. Aussie CAD, I'm still bullish. Aussie Swiss, I'm holding. Aussie Yen, I closed out this week for profit, like 200 pips. So this is now done. Closed longs. Now looking for trendline break to be bearish. Okay, so let me change it or not. That's weird. Anyway, I'll get in here and get into the back office, but I want to be bearish on the Aussie Yen. I'm in a sell trade on the Aussie New Zealand. I'm holding long the Aussie dollar. The Aussie dollar, we didn't buy anything. We took that trade. We had a 7,000 trade. We took profit at 71. I'm looking to get back in around like 67, 66.50. But I'm going to wait for a trend line break. So I'm anticipating something, a correction on the dollar. CAD Swiss, I'm holding long. CAD Yen, same thing. If I can look at a potential rising wedge, looking for confirmation, I'd like to short the CAD Yen. I'll just have to change that to bearish. Swiss Yen, crazy, ridiculous highs, 145 to 150. That's a big sell zone for me. I'm looking for confirmation. I'm looking for pockets. We've got pockets all the way back down to 143. I stacked in some sell stop orders yesterday. They haven't been filled yet. They're around 146.75. But we're as high as like 148.50 right now in the Swiss Yen. So still watching that pair. Euro Aussie, Euro CAD, I'm out. Euro Swiss, I'm still bullish. Looking for a price target at 103. Everything else neutral here. Euro Yen, I took profit at the high. I wouldn't be surprised if we have some heavy resistance at the highs on Euro Yen, Euro New Zealand, similar to Euro Aussie. Euro Dollar, off of parity, off of some lows, 99, 98. I'm looking for a falling wedge, looking for a dollar correction. If we get a dollar correction, that Euro Dollar is going to be a nice bullish play. I think the dollar trades become pretty heavy, oversaturated. I know the dollar's king. I know the dollar's reserve currency right now, and it's getting a lot of love. But technically, I mean, if I know a little bit about technical analysis and I stare at a dollar chart, I stare at the euro dollar, I'm still looking to be short the dollar. And I know right now it's like fundamentally I could be totally wrong. But when a trader comes to me and says, well, Chris, we just be long the dollar? I mean, you're essentially buying into an 18-month trend, which to me seems a little counterintuitive to what usually works. So I get that the trend can stay a little bit longer, a little bit more stubborn, a little bit more rational. But again, I don't like to buy high. I don't like to sell low. So I'd rather wait. And so I'm looking for a nice little squeeze in that dollar, that euro dollar to the upside towards 104 to 105. Pound Aussie, we're watching that one closely. Right now we're making lower highs and lower lows. Pound CAD, I'm holding bullish. We're nearing, 20-year lows on the pound CAD with oversold conditions and divergence on a weekly time frame. I'm really looking for like a 1.5 to 1.6 move. That's a 1,000 pip opportunity, hopefully, on that pound CAD. Let's see here. Pound yen, looking to sell that at the highs at 168. Pound New Zealand, nothing. Pound dollar, we're back down towards Brexit lows. We're back down toward flash crash lows in 2020. 112.50, 110. I'll take it down to those levels. But I'm just, gently buying into a giant overextended move on the pound US dollar. Again, we have a big move in the dollar at all. Any correction on the dollar, pound dollar can retrace. And again, fundamentally traders are like, well, Chris, UK inflation's at 10% and, the queen just died and blah, blah, blah. I know, I get it, but I'm trading the charts, right? So I look, I've traded Forex for 15 years. I've never looked at a chart and sold low and bought high with confidence. Now, yes, the sell low and buy high, maybe we have a flash crash. Maybe we have, the final capitulation move to the upside or downside to finish the whole thing out. But that's not something I want to participate in. I mean, we don't know if that's going to happen. And so I'm already long the pound dollar. My break even's like 115, 116. So I'll just wait. If it comes back to 120, comes back to pockets at 124, all right, fine. New Zealand CAD, I'm holding long. New Zealand Swiss, we're in at 59.30. We'll hold on to that one a little bit. New Zealand Yen, if you sold it at 87, 87.50, there's some profit opportunity there. New Zealand dollar, some pretty good support at 6,000. Dollar CAD, that one still won't hit my highs or lows. I'm trying to sell it at 3,300, 3,350, trying to buy it at 26.50. None of those levels are getting hit. Dollar Swiss, we were bullish. This one I took profit on right around 98.60 and took profit, which I'm glad I did because we've had like a 200 pip drop on it this week. So protected those pips. That was like 350 pips on the dollar Swiss. Dollar yen, just waiting, man. Waiting for a daily trend line to break, waiting for confirmation. Man, I watched Hard Knocks with the Detroit Lions this last week. And I think I heard Dan Campbell talking he's the head coach. He's like, come on, man. Come on, man. Dollar yen, man. So sorry, it like sneaks in. Anyway, that's where I'm looking at for some of the directions in currencies. Who won the game last night between Rams and who was it? Was it Rams Bills? No. Who played last night at Amazon? I know it was a anticipated game. Rams what? It was a Super Bowl rematch, right? Why am I having a blank? But yeah, the Bills. Okay, who won? Did Buffalo win? Was this last night? Oh boy. Bills. The Bills. All right. Rams. Looking soft. Man. All right. Fair enough. Cool. Okay. Aussie CAD, we're good. Aussie Swiss. So I went through the directions. I'm just waiting on some stuff. Let's talk trend lines. Here is CAD Yen. Okay, so we have some overextended conditions. A lot of the yen pairs look like this. We have some big breakout pockets this week on Tuesday. I wouldn't be surprised if, if today is going to be the high or we go a little bit higher. Just, this pocket's probably going to get filled. In all honesty, it either comes right down to the pocket and then we start to break this trend line. We might be looking to carve out a top in these JPY pairs. And I say might because we've obviously seen them not form any tops at all this year. Here's dollar yen, same thing. A little bit of high volatility. Like I said, I'm like, oh man, I missed it. I did get my fill at 145. I had a 300 pip move that I missed by 2 pips. Yeah, that sucks. But the reality is, did it break my trend line? No, it didn't. Do I have pivots right here to trade back to? Yes. Do I have this low? Do I have this crazy high 400 bar count? Yes, yes, yes. So what am I looking to do? Well, I'm still going to ride this thing out on the left side a little bit higher if needed. I've taken some losses along the way that I'm looking to add those back in at better levels. And I can still trade on the right-hand side of the trend line if and when we have confirmation. And that is the question, right? We had confirmation right there. We had a chance to sell it. We had confirmation right there. We had a chance to sell it. I have confirmation right here. I have a chance to sell it. And maybe it's that, right? Maybe it's connect the lows and we trade it down and we don't quite break lows, but we still have some open space. If we do break the lows, then we're talking about a topping pattern. Head and shoulders, crown, anything to form a topping pattern, right? So watching to see if the dollar yen will continue to cooperate. Maybe it's a turn in the dollar. We'll watch the dollar index over the next couple of weeks because we have CPI data next Wednesday and the FOMC the following week. Okay. Hey, Pam, how are you? Nice to see you. What's happening? Dollar Swiss, we're good on that one. Yeah, I took profit on dollar Swiss this week. And certainly glad that I did because we were long in the trading room back here around 94.75, took it all the way up to, and it was one of those good enough spots where it was very close to the pocket target. We were very close on my charts to my profit window, which was right here. And, oh, fudge. 290 on Tesla. All right, well, that's a good thing. Looks like I'll be rolling some Tesla calls today. I've got a 9. I'm going to check that Tesla. What do I have in my notes? I think I did a 916. Tesla, I've got a 930, 290 covered call. I'm going to roll that. I'm going to roll that probably up to 295, $300. I'll see where Tesla goes. If it's, it's a volatile stock, so if it's up to 293 or $300, I'll try to roll my strike price up a little bit and maybe go out to, mid or late October. So I do intend to hold Tesla just like I would Apple and Google and Netflix and Amazon and stuff like that. Anyway, dollar Swiss, I hope you protected with me. We had several days to do it, right? Look at all these wicks. 1, 2, 3, 4, 5 tests around 98.50. You had a chance. We scored this point right here for the bulls. We were just shy of that profit target, but like I said, good enough, especially with a trade running like that. So glad I protected. And I'll say this on dollar Swiss. If the dollar Swiss comes back down, guess what? I'm going to buy it again. I'll buy some more. I'll buy some more, and I'll trade it back up to this little pocket. And maybe we have this larger correction or channel that's going to play out on the dollar Swiss. So if it comes down low enough, I'll buy some more at lower prices. Okay. All right, that's dollar Swiss. Any other currency pairs you want to take a look at? We'd looked at directions on everything. We can take a glance, but let's go Swiss yen. Swiss yen's trading at 148.33. This is the pocket that I'm trading back to. In the near term, I can look at aggressive trendline breaks and all this stuff, but the reality is this. I mean, I can take this trend line right here and extend it up, right? We break that trend line, I'm looking to be short. Okay. Right now, between 148.30 and the highs at 150, I do have an entry sitting at 150. Right, I have some pending sell stop orders around 146 and change. I have 146.75, 146.50, 146.25. If I can get filled in on some sell stop orders and it goes down to that pocket, I'm going to scalp that for a little win. And then I'm going to look to see if it breaks the trend line, and I'll get back in on a lower high and try to trade this down towards an outer trend line. Try to return to a bar count, try to get back to a previous low, whether that low is this low, or this low. So it would be nice to see a little shift coming on the Swiss yen. But again, you can see that confirmation isn't quite there. We haven't broken that larger trend line. So I don't want to guess where the high is. That is one thing that will get you in trouble. Okay, Euro yen, yep, we'll take a look at that one. So Euro yen, like I said, I protected profit. I was hedged on the Aussie yen. I took profit on the Aussie yen this week. So this was a trade where I was long. I was long right in this consolidation, and my target was to see if we scored a point for these bulls, and we did. So I took some profit on the Aussie yen for a few hundred pips. Now I'm looking to see if it will start to line up a trend line break. Start looking for bear flags, confirmation to sell this back down. Do we get it? Wait for confirmation and let's trade it. I've been telling traders now for like several months. Unless you're building a position on the dollar or the yen crosses, if you're trading what you see, that's the best rule of thumb right now. Trade your alignments. If you have a trend to overlay it, what's your trend? Buy zone, sell zone. If it's in a buy zone, stay with the buy zone. Sell zones have not been, they have not lasted very long in these JPY pairs. There's been high volatility movements. We have some covers, but man, we don't really have any bear trends right now on the yens. They just haven't confirmed yet. So Aussie yen, glad I took some profit. Could it run a little bit higher towards 99 or towards 100? Maybe parity at 100 is a huge, massive round number resistance between 100 and 102. Really interested in shorting that Aussie yen. But right now, I'm looking to see if we have confirmation coming earlier. Euro yen for Craig, right here, good spot to be looking to short. Did anybody short it right there? If you did, you're up a few pips. It's not a ton, obviously, but we have a pocket right there. We got a pocket right there. This could be a really nice resistance zone to hold and possibly come all the way back down. Now, I say possibly because what we can be looking for on this, this is a daily chart, but we can look on a smaller time frame. We could look for a price pattern. We can look and see if we have a crown on top or we have a trend line break and something to trade. If we do, there's plenty of room to the downside to get this thing going, have price move in your favor, move your stop loss to break even or better, and just let this thing run. If this runs halfway down, that's a good chunk of profit. Runs all the way back down to this low, great chunk of profit. Okay? For this last couple of weeks, I know a lot of traders were antsy about like, oh, I think it's a head and shoulders. I said, okay, I see it. I see this potential head and shoulders. But if this does not break, right, if we don't break a trend line here, there is no head and shoulders. This could come right back up and be a double top. And that looks like that might be the case. We might be having a double top at these highs at 144. Okay. All right. Brad, yeah, so that's with my flex trading room. Yep. If you're a subscriber to the Flex Trading Room, you get that dashboard. Yep. Okay, good on that, Craig, for the euro yen. Yep. Yeah, so if anybody's interested in the trading room stuff, it's right here. Pulverport.com. So website, go to systems. I hate that picture. Go to systems, go to trading rooms. So if you click on systems, there's full classes, right? Price Action Pro, Perfect Storm, Right Trader. These are all classes, full education, videos, course guides, robots. There's a lot of robots here. Some of these are just the robot. If you just want the robot with some directions and videos on that. So there's full systems and robots of interested in trading forex, and then trading rooms. Again, you're going to learn a lot more by trading. You learn by doing, you learn faster by doing, you remember more by doing. So, Flex Trading Room, we're trading Forex Tuesdays, Wednesdays, Thursdays. You're coming to my YouTube session here Mondays and Fridays. So, we essentially cover the whole week. Equities on demand, we're trading stocks and options every single day. Why? Because, Mondays to Fridays, we're dealing with a lot of options and expirations. We're adding trades. We're trading both sides of everything. This year, actually, I found this really interesting picture. Let me see if I can find it on Telegram. I know I sent it to my buddy. Might be on Capital Buddy, Jared. So subscribe to that channel. Check this out. There was a record. Look at this. 22 years. None stand out like this. Institutional traders bought $8.1 billion worth of put options. So this was on Wednesday. Okay, this is a Wednesday tweet. So this is 3 times more extreme than 2008. All this is showing you is that traders are trying to CYA, right? Everybody know what that means? CYA? Cover your arse. Because if things go sideways or down, traders want to be protected. And so having that put option exposure can help protect the downside. Now again, there's risk, right? If you go long the put, you're paying to do that. And if you're wrong, you're going to lose that. But it's a defined risk. And the reality is, if you're wrong on your put side and the entire market goes up, your portfolio is going to benefit because, inherently most positions are going to be long, right? The stock market assets go higher, companies improve, companies do better. We're obviously in some doldrums right now, and we have plenty of headwinds ahead. But with that put option, that's crazy. I mean, the fact that we're 3 times more extreme than 2008 is nuts. So there was definitely some panic volume. I think after Jackson Hole, I think it made a lot of traders nervous. And look, I'm one of those traders. I think that in my equities on demand trading room, we've talked a lot about this. We are like 85 to 90% options right now, meaning that we are trading both sides. If the market goes down, do we want to take ownership? And if we do, it better be a quality stock to throw in our portfolio. This week has been a surprisingly bullish week. Again, it still has room to run up to Jackson Hole. We might see this. So we gapped. It's 9:38. Market's open. We gapped higher. Like I said, this market will come back and see what this does next week. We could come right up here to this Jackson Hole pocket. We're leaving a gap today so far. So if we come up to this monthly pivot, come up to that Jackson Hole pocket, bears can step back in from there. That's a nice little supply level. Or the bulls can keep this party going. There's been a surprise move in tech this week. Let's take a look at sector performance for the week really quickly. So, and sorry to get off pace there, but Brad and anybody else, if you're watching this recording, if you want to trade with me live, here's a good way to start. Pulverreport.com, click on systems and trading rooms. You want to trade with me live, I offer $27 trials for the full month. So you can trade with me for a full month for $27, Flex Trading Room, Equities on Demand Trading Room. And yeah, I mean, and then there's full memberships. You can just do a month to month. You can go a whole year. You'll save a lot more money going by the whole year for sure. Okay. Good stuff. Yeah. So I want to go sector performance for the last 5 days and consumer discretionary, financials, materials, energy. We had a big dip in energy, like oil. USO broke that $70 support. We saw US oil down to the low 80s. We're going to take a look at gold and silver here in just a moment, but materials crushing it right now. Love it. I'm long on steel. I'm long on aluminum. I want to take a look at a couple of those stocks actually. Alcoa. What's Alcoa doing? We're back up to 51 and change. I got Alcoa called away for like $11 a share. I have some more credit spreads in that are staggered out. CENX is another aluminum player. Century Aluminum. Off the lows at 809. I've got a break even here with a covered call around 16 bucks. And I'm going to sit on that one a little bit longer. And, this one might come into like low lows. But what's the other one I'm watching? In addition to copper futures, copper's holding okay. FCX, Freeport McMoran. This one, big jump on materials. This is a big copper play, Freeport McMoran. Okay, so big jump here. We had lows at 28. I have a 916 covered call. I have a 923 covered call. This could be another stock that would break evens at $28, $29. Maybe I can flip this for $2, $3 a share. I'll take it, right? And then more credit spreads that are staggered out till the end of the year. What was some other ones? Material play, CLF, Cleveland Cliffs. 1801, we've got 16 by 15s. We're going to be in full profit. We looked at it yesterday. We can close this for a debit and walk away with like 50 plus cents on the contract, which is good. We have staggered credit spreads out at these lows. I also have some big positions and some promising positions on these. This might be wishful thinking, but man, if I hit this target, this is a game changer move right there. If we have a broadening pattern and this is support, 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 and we can get the bulls to step in and take this thing higher, man, I am going to crush this stock for the second time in 2 years, because traders that were with me in 2020, we traded a lot of this in 2020 and took a huge profit in 2021. Okay, sorry, we traded this a lot in 2021, I should say, and took a huge profit in 2022. And then we started to get back in at these lows, and hopefully we can do a repeat of that. CLF and X are very similar with steel. So I like the fact that materials are getting some love, and between energy and materials, I'm still in that game. Same thing here. Potential broadening pattern if we connect the high here with the lows here. So we break this high, let's go, man. Let's get to 40 bucks. Ownership prices in the low 20s or even the teens. Let's get a big old move on this. Okay. All right. Brad, you're in Flex. Good. Did you just join Flex? Yeah, that dashboard you should have access to. If you're a subscriber to Flex, you have access to that dashboard. Gold and silver, and we'll take a look at crypto. So gold's at 1714. Again, watching the dollar. If the dollar index is going to start shifting lower, gold should hold these lows and start shifting back up. Silver, same thing. If the dollar is going to drop, silver should pop. XAGUSD. Silver's, working off these lows. I said the last couple of weeks, if we score a point for those bears right here around 18 bucks, it's a pretty good spot to get long. So we had a decent little move. All this in silver, in my opinion, is all corrective. Now, we could stay corrective for longer, but around $14, I'm looking at a big bullish trade to the upside on silver. So I will maintain my shares of SLV. I'm looking for long opportunities, whether I'm adding more credit spreads, which we do have, or we have some long call exposure at some point when I think that the timing is really nice. Okay. All right. Really quickly, we'll take a look at Bitcoin and Ethereum. Bitcoin 21017. Nice little pop here going up to that monthly pivot. Now, it's exciting, but be careful. And I say that for this reason. There is a pocket right here that Bitcoin can come back and find. We also could pop right up to that monthly pivot, hit the backside of this trend line, and still drop. All right. So don't get too excited on this risk-on rally, because if the stock market or the S&P just rallies up to the Jackson Hole pocket and then starts to fade, Bitcoin's probably going to look very similar. Right? So just be careful. It's obviously better than watching it drop like crazy, and we're not below the lows of 18,000. But just putting a little caution out there. That pivot, that pocket could be hit and hit some resistance, and we'll see what happens. Of course, if it closes through this, if it closes through that pivot and goes up to take out the highs, now we're talking about different structure. Chart alarm on SVXY, that is great because that one I could get called away next week. So $55 covered call for next week. I can look at that stock. Hopefully we'll maintain this area. Again, watching closely. If the SVXY can run a little bit higher, maybe to 56, I might get this one called away next week. And that would be a nice little $6+ share move. I still have an October 21st bear call spread that got filled, but that's an 80-cent fill. I'm risking 20 cents on that, which is not a big deal. I'm happy to give up 20 cents on that contract when I'm making $6 a share on what I own. Okay, any questions? Got a little break. I'm going to grab a little cup of coffee before class at 10 for equities on demand. Any questions? Any final thoughts? Appreciate everybody being here today. I know we didn't have a session on Monday because of Labor Day, but we'll have a session next week, Monday and Friday, youtube.com/Chris Pulver. Also, if you would kindly subscribe to the Beyond Capital Group, just look for it in YouTube. I typed in the chat. I'll do it one more time. So copy. This is Beyond Capital Group, BCG channel. And Jared and I will be posting some good content and hopefully have some fun interviews lined up in the next few weeks. But check it out. And look, we got a couple great videos in here. Check out the snapshot from a couple weeks ago, and we just posted this one, the make or break levels on the S&P. This is what we're looking at for how we're positioning our entire hedge fund. So, might want to check it out. All right, cool, everybody. Have a great weekend. I'll be back here on Monday for the Pulver Report, Monday and Friday, 9 a.m. And happy Friday, Equities on Demand students. I'll see you at the top of the hour, and let's crack through another session, finish up the week. Okay, thanks everybody. And real quick before you go, hit that thumbs up button for me, please. And I'll see you Monday. Yep. Stara, thanks for watching. All right, see you everybody. Have a good weekend. Bye.